Over 20,000 tech workers have lost their jobs so far this year. That's according to the latest data out from Layoffs.fyi. Now, the latest cuts coming from iRobot here today, just this morning, announcing that it's going to cut about 31% of its staff. And Glassdoor data showing a recent spike in layoffs is hurting employee confidence, that falling to its lowest level since 2016. So where does the labor market stand? We want to bring in Daniel Zhao. He's Glassdoor's chief economist. Daniel, it's great to have you back here in studio with us here. So ahead of the jobs report that we're going to get on Friday, the last several reports have really proven the fact or really signaled that the labor market has stayed resilient, yet we keep getting these types of headlines, specifically within the tech sector, that they're losing jobs and they're continuing to lay off workers. What's going on? What's the reason for that?
Well, so I think it's interesting because we say that the job market has been resilient over the last year, and that's absolutely true, but it definitely has slowed. The hiring rate has come down pretty significantly, and then even though measured layoffs are still fairly low, clearly it is something that workers are concerned about. That's why we see employee confidence coming down, and that's why people are still concerned, even though the hard data is showing that the job market is still relatively stable.
And so for those who are now in the midst or caught up in these layoffs now, are there enough positions for them to get back into or to enter into elsewhere? And where is some of that rotation happening?
Well, I think that's a great question because the hiring rate has come down really significantly in the latest JOLTS data, and that's basically at its lowest pre-pandemic level since 2014. So hiring has really come down, even though layoffs haven't really increased as much as the headlines might imply. And I think that's actually creating a bit of a lock-in. You know, we talk about lock-in in the mortgage or in the housing sector rather, but for the job market, we're seeing a lot less hiring. We're seeing a lot less voluntary turnover as people quit less. And there are a lot of people who are kind of hunkering down and in a bit of a holding pattern for their careers.
Daniel, we're getting headlines out. It seemed like that conversation died down about this push in the return to office, but Bank of America, one of the latest from Wall Street, really cracking down on the need that employees need to come back a certain number of days a week. What do you think that's going to do to the jobs market, to the jobs picture here in the next few months?
Well, I think it's really a signal of the fact that employers are getting more power, right? So over the last year or two, the balance of power has shifted back towards employers. That means that they can more aggressively pursue these return to office plans. And quite frankly, like it's still up in the air how exactly that's going to turn out, whether employees are really going to acquiesce to this or employers are going to have to push even harder.
And so as we're staring down this week's jobs report, what do you believe the data is going to tell us about the health of the labor market right now?
Well, I think the job market was resilient through much of 2023, and that is still probably the picture we're going to get in 2024. I don't think we're going to see really this latest wave of layoffs really affect the numbers very much, but I think that we are going to see some softening. We are going to see that the jobs growth slow down a little bit more, and also we're getting a lot of revisions in this report with benchmark update and that sort of thing, and I think overall it's going to show that 2023 was maybe a little bit cooler than we had originally thought.
Daniel, when you talk about so many of these headlines involving tech companies here, is that going to be the theme when you look out to the rest of 2024?
I guess it depends on what the theme for what, right?
The layoffs, yeah.
Yeah. For layoffs, I think we are still going to see a lot of tech companies try to cut costs and continue this year of efficiency mantra from 2023 into the new year. That being said, I think that a year is a long time. It's not really certain what exactly we're going to see in the new year. On the flip side, the industries that were hiring last year, I do expect to continue to add jobs in the new year. That's healthcare, education, government. Those sectors I do expect to continue to grow in the new year.
You know, we went from quiet cutting taking place and that being a talking point to now very loud cutting. And there's a larger question of what percentage of these jobs might actually be replaced by some type of generative AI? And are you seeing any listings now for either people being brought on to do those roles or it just being positions where they make the switch to say, okay, that is something that artificial intelligence can handle?
I think it's still a little bit early. Like a lot of these AI technologies are very new. They're not really proven. And so we are seeing some examples of companies investing and experimenting in these technologies. But I think a lot of companies are still hesitant to really pull the trigger and say, we are going to fully replace this job with AI. That being said, the advances in that space have been very, very rapid. And so I wouldn't be surprised to see disruption in this year. But I think it's not a foregone conclusion that we're going to see significant job displacement in this year. I think we're still in that experimentation phase.
Daniel, one trend that we are starting to see over the last several months, and it's likely going to just get even louder from here, and that's the fact that some of these workers, especially the younger ones who are laid off, they're making these social media videos here on TikTok, on Instagram, that end up going viral. What do you think this just signals about the shift that we're starting to see within the workforce, and how some of these companies are trying to mitigate some of the risk that could come from a viral video like that?
Well, I think it does show that the younger generations are very online, right? And that a lot of information can spread very quickly in today's world. And it's just kind of an extension of the fact that an employer's brand is very, it can be affected more in today's society, where information can spread quickly, where if you don't handle layoffs properly, if you don't treat your employees well, that's a risk factor for your employer brand moving forward. And not just in the short term, that's the kind of thing that people might remember for the long term if they know that your company handled layoffs poorly in the past.
Daniel, always great to get some of your insights. Thanks so much for joining us here in studio.
Thanks.
Daniel Zhao of Glassdoor, their chief economist, joining us here today.